Hey guys, I hope you guys are having a great day today. And today I want to talk about the Chinese trade war. So we're in a trade war with China right now, and I want to talk about how that's going to move the market over the next few weeks. So on March 1st is the big deadline. So basically right now, if you didn't already know, there's 10% tariffs on Chinese imports to the United States. And basically that's going to go to 25% as of scheduled now on March 1st. So right now there's a lot of lawmakers in China trying to make the deal, right? So we want to talk about what the market's gonna do in all of the scenarios, right? Because right now there can either be a deal, there could be no deal at all. There can be kind of an in between where the tariffs stay at 10% instead of jumping to 25, right? So I want to go over all of those scenarios in detail today and tell you how I think that's going to move the market. So let's get right into it. So I wrote down scenarios over here on what could happen, right? So basically, I'm going to go over scenario number one, and then I'm going to tell you how I get the PE ratio that I have written here. So basically, scenario number one is that there's no deal at all, right? And the tariffs jump to 25% on March 1st. So what I think in that scenario, I think it'll be really bad, to be honest. So I want to go over the earnings, right? So basically I have a 15.5 PE ratio I think the market will trade down to. And I'm going to tell you how exactly I calculate that. So let's just go to the earnings. So if you guys don't know how to calculate a PE ratio, I'm going to teach you right now. So this website tells me all of the S&P 500 earnings every year. So this number over here is just the year over year growth rate, right? And basically, if you want to calculate a PE ratio, you take the last 4 quarters and add it up. And that's your E, right? In the PE ratio, there's 2 letters. One is P and one is E. So this is going to be the bottom number, right? So now all you do is take the S&P 500 value. So that's 2709. And we divide it by 162 to get the current PE ratio. So I have that done here. And basically you can see we're trading at a 16.7 PE ratio. So historically you want to use a 15 to 16 because that's the historical average. So you can see we're a little above average. We're not that overvalued right now, but we could be, and I'm going to go over all the scenarios, right? So basically, the first scenario is that if there's no deal, these earnings are just estimates for 2019. And basically, I saw these estimates about 4 months ago all the way at 178, right? So we're talking about a significant decline, right? Basically, the analysts realized, like, wow, these companies are not going to meet the numbers, right? China slowed down significantly, and that's with a 10% tariff. So you guys can do the math. The growth rate went from 9.5 expected to 4.4. And that's a really big decline. And that's only with 10%. So if we see a 25% tariff, you're going to see this number probably get to 0, possibly even go negative, right? That's how bad it can get if there's no deal. And then Trump puts these 25% tariffs impact. Like, you're gonna have a really big impact on the market. And basically, that's the number I have here. So let's go back to Notepad. So I think we're gonna trade at a 15.5 PEs, right? And just for the sake of calculation, let's say that there's 0 earnings growth from 2018 to 2019. So this number is also gonna be 162. And you guys don't have to know how this number is calculated, right? You guys have to just know that this is basically the standardized earnings. And if there's 0% growth from 2018 to 2019, then this number is also going to be 162. So I have that calculated here as well. Or it's here. So basically I'm assuming a 0% growth rate, right? If the 25% tariffs go into place, and a 15.5 PE. So we're talking about a 200 point drop on the S&P if there is no deal. Like, this is actually possible. And you can see, right, how the market often overshoots and the market often overshoots, right? So the market doesn't go to exactly the fair value, right? Let's call it that. The market tends to undershoot. So if there's no deal, that can scare so many investors, and we have to be cautious about that because it's always a possibility, right? There doesn't have to be a deal in place. So that's just the first scenario, in which case I think the market will get down to this 2,500 level. If things get really bearish, guys, and I'll continue to make videos, it can undershoot that by a lot. And we have to really see how these earnings numbers shape up after that happens, because as you can see here, most of the growth is projected in Q4 of 2019. So most analysts are saying that October to December of 2019 is where most of the growth is going to happen. So basically what that tells me is that analysts haven't revised down their numbers yet. And what that means is that like they can take down these numbers really quickly if they start to think there's going to be no deal. And then this number is going to reduce a lot, right? And that's the uncertainty in the market. So let's talk about the next scenario, where if there's a temporary deal, right? So if there's a deal that stops just the 25% tariffs, I think you're going to see the market trade at a 16.5 PE. I think that's really fair. And I also think that these growth numbers are probably going to go down maybe a little bit because 10% tariff is still a lot. But it's not going to be that bad, guys. If there's still a 10% tariff, like, this number will probably get down to 167 in my opinion, because Q4 will get revised down if there's still 10% tariffs at that time. So what I calculated here is the S&P 500 value in that scenario. So as you can see here, it's gonna still be higher than where it is now in that scenario. So it's not all looking bad, right? And basically, number 3 is that by March 1st, there's a deal that gets rid of all tariffs, right? And this will be really good for the market. I think the market will react really strongly to this. And I think the market will actually increase its PE in that case. I think it will increase to 17 over time. And I also think that these earnings numbers, I think you're going to see this number go back to 173 range, which would put this at about 6 to 7% growth rate, which is really healthy for the U.S. economy, right? And I have on my calculator right here. So basically, with a 17 PE on 173, you're going to see the S&P 500 trade at 2941. So the S&P 500 could get all the way back to all-time highs, guys, by the end of the year if there's a deal. So I think the deal is what's really like keeping the market on edge right now, and we have to be really cautious because the thing is, if there's no deal, China's economy is going to slow really hard. And I don't see anyone in the media talking about how hard the tariffs are going to hit these earnings numbers, guys. And we have to be really cautious about that. And the deadline is March 1st, like I said. So we have to see how that's going to play out. Basically, if there's no deal, I think China is just going to continue to get weaker. But if there is a deal, you're going to see some China stocks really explode to the upside. So a lot of the ones that are oversold are going to start to really pick up. And I think it's just going to be good for the global economy, guys. So we have to see what plays out. But for now, for at least the next week, I think you're just going to see the market just like try to just wait for that, wait for it to play out. So I think we're just going to see some sideways grind, maybe a little grind higher until we get the confirmation on what's happening, right? Whether there's a deal, like, are we still in talks? Like, the market needs that clarity right now. And I'm going to keep you guys updated. And yeah, guys, I hope you guys are having a great day. And please like and subscribe to the channel. I'd really appreciate it. And yeah, just comment below your opinion on this and how you guys are trading this. I would love to know in the comments. Just please tell me. Thanks so much, guys. I'll see you guys later.